Well, for our longtime viewers, you know that this time each week we have a very special guest that drops by right here in the studio, and this is no different. We have a special guest right beside me right now, and it is Mr. Chris Swift, and he is with Swift Trading. He's based right here in Nashville. Happy day. How are you?
Good morning. Doing great. How about you?
You know, I don't know. The markets are sending mixed signals today, and in fact, let's dive into these prices here. And I want to remind you that we had an overnight sale that affects this corn market here. We had the corn now just fractionally weaker. It's actually an improvement over a little bit ago here. Chris, we have December corn now just a half cent lower at 5.52.5. Now, we had been a couple of pennies lower earlier. That overnight sale that I was referring to, it does affect corn, and it was actually a sale to Colombia. What did they buy? Well, they bought 150,000 tons of U.S. corn. It was for delivery in the current marketing year, so we thank them for that business. Nice to see that, but Chris, no mention of China and no mention of Mexico anywhere. And, you know, it's getting kind of late in our export season here. We're kind of waiting for the big numbers. They're just not happening.
It is, and they might not happen for the rest of this year. We've still got some, you know, sporadic issues going on with China right now. And the one thing I look at in general is we had some movement by the Fed last week that kind of impacted our dollar a little bit, interest rates a little bit, but didn't seem to impact the grains much. And every Monday morning when I get up and look, they're not down dramatically. So right here with harvest finishing up, it seems like we would see a lot more downward size pressure to them, but we're just not seeing that.
Let's look at our quotes provided by Bar Chart on soybeans. And on the soybean trade in the early going, we're still a little bit weaker. January down 5.5 cents at $12 even, exactly $12. Well, now I scared it. Now it's $11.99 3/4. This market, it just acts so timid ahead of the WASDE report tomorrow. How come?
I think a lot of it because the bean probably is going to be right about the same as far as the yield production goes to it. And the bean oil lost a little bit of its momentum. If we look back and we see what was the big mover in the complex, it's definitely been the bean oil. Now that the bean oil is kind of softened just a little bit, the beans have come down pretty hard, and I saw them testing some trend lines this morning.
Well, let's look at the wheat market, and we'll go to Chicago wheat first. And on the big board here, we have that December contract actually a little bit higher. Now we're 2.5 higher, Chris. We're at $7.69 per bushel. So that would be about 6.5 cents off of our earlier low of the overnight and early morning trade. So let's go to Kansas City wheat. Well, now we're 4 higher at 7.82 3/4, and that would be within a penny of our high of the session so far. And if we go to spring wheat in Minneapolis, December now 2 1/4 lower. We're at 10.07 1/4. So kind of a mixed affair going on in the wheat. Do you think there'll be any kind of surprise in that WASDE report regarding wheat at all?
I don't think there will be, but just look at the price of wheat. Over $7, nearing $8. Those are phenomenal prices for wheat that we hadn't seen in years. So the price alone is very good, and we know that the spring wheat, we're just not going to get any of that until this time next year. So
what about the spread between it and corn?
It's probably going to continue to widen, although we know that we can use other varieties to help with that spring red wheat, that other varieties can come in there and help take some of that slack up.
And before we get into the break, I want to take a look at what the oats are doing here today. We got to throw that in there. Yikes! December down 31 cents. Is that right? Down 31 cents at 7.18 per bushel. Look at the high, 7.55 1/4 overnight. Holy mackerel. Okay, that one will scare everybody out. We're going to take a break right here. We'll come back and we'll see how the cattle and hogs are doing right after this. Well, let's check out our livestock trade here on a Monday morning. Let's go to live cattle and see what they're up to. And now we have turned mixed, Chris. We have December quoted at 132.02 per hundredweight. That would be up 22 cents on the day. It's off of our earlier high by about 30 cents. The deferreds, if you go out into late next summer, they're actually about 10 to 25 cents lower, so a little bit of a split decision going on here. On the feeder cattle market, they have turned lower. Now, this is interesting. They were higher earlier, and we have January. We'll go with that. It's down 17 cents now at 159.42, exactly $1 off of its earlier high when it would have been roughly about 80 cents higher. What's that about? Do you know?
Not necessarily today's trade, but we just saw last week we had tremendous volatility and price expanse in the feeder cattle market and almost nothing in the feeder cattle index. We got a higher cash trade, and probably the best news that we got was the employment report that we got on Friday showing more people back at work. So it's a twofold scenario where at least some of those people might have gone back to work at a packing plant. We know that as employment increases, somehow or another those packing plants probably increase as well. And that any of the consumers out there that had been out of a job or needed a better job, that improvement right there will help them to be able to have greater discretionary spending.
Interesting. And we had very strong cash cattle trade to wrap up the week.
Fantastic. Some of the best we've had in weeks.
Yeah, now everything is just kind of tailing off. We wondered if that would support the trade. Let's look at lean hogs here today. And so far, well, everything's a little weaker now, Chris. We have December lean hogs at 76.22. Well, you know, that's $1 and a dime off our earlier high. Right now, we're down 32 cents on the day compared to our close on Friday. So maybe a bit of a reversal in trade here, too. So what's impacting the lean hogs today from your perspective?
The lean hog index. The lean hog index has continually been soft, and because the future settles to the index, then that's the direction that the futures tend to go. And with this kind of shorter period of time in there, I think all you're seeing is just a convergence to the index, and there's just not a lot of futuristic aspects out there that says hogs are really going to move higher or lower based upon much of anything. So I think they're just going to kind of hang around that index level.
If we look at the cutouts from Friday afternoon on the beef and the pork, I think there was quite a bit of pressure out there. As far as the beef cutouts go, they were down 68 cents on the choice cuts. Selects were down 70. And on the pork side, on the carcass values Friday afternoon, yep, they were down $1.34. Loin market down $11 on Friday afternoon. Bellies were down $1.55. The only gainer was the hams, up just about $3.50. Chris, great to have you in. Thank you, sir.
Always a pleasure.
Appreciate it. Look forward to next time. Chris Swift, Swift Trading in Nashville. Janet, back to you.